If trading Forex was like a puzzle, then candlestick charts would be like the little tiny confusing pieces to that puzzle. If you don't understand these pieces and you don't understand how to put them together correctly, then your chances of consistent profits are next to zero. And that is why in this video, I'm going to get you to a point of not only understanding candlestick charts, but mastering them so that they can help improve the accuracy of every single trade you place. I'm going to do that by first explaining to you what a candlestick is and what it represents. After that, I'm going to teach you how to tell the story of each individual candlestick. That way, you don't have to memorize the hundreds of candlestick patterns that are out there. Instead, you can just look at a single candlestick, and based on the price action within that time period, you will know what the market's likely to do next. And at the end of the video, I'm also going to be sharing with you the two candlesticks that I think you should be paying attention to. These are two candlesticks that have immensely improved my ability to accurately make market predictions. I think they can do the same for you. So if you are interested in that, then I need you to do two things. Go ahead and click that subscribe button down below the video to the right-hand side of the notification bell so you never miss content from us again. Click that like button for me to help out with the YouTube algorithm. Third thing actually is go ahead and follow us over on Instagram to get some early release content. You do that while the intro and disclaimer rolls, and I will be right back to share with you the only candlestick chart video you'll ever need. See you soon. All right, welcome back, guys. So before you can understand a full candlestick chart, you have to understand a single candlestick itself. So let's dive into that right now. What you see on the screen is a single candlestick, and that means it's not in a relationship. Just kidding. And what these candlesticks represent is a certain period of time. It doesn't matter what that period of time is. For instance, you've probably seen this before on your chart. We have daily charts, we have 1 hour charts, 5-minute charts. For example's sake, we're going to assume that this is on a daily chart. A green candlestick represents a day in price. If we're on a daily chart, it really represents a period of price where price closed above where it opened, or a positive day in this case, meaning that we had a day that price increased for a certain asset, in this case, a currency pair. So on these candlesticks, we have two major parts, which are the bodies and the wicks. We have the body of the candle, which is represented by the green and red. We have the upper wick and the lower wick. That is less important to understand than understanding the four main points of a candlestick. So as we said, we're going to focus on the green candlestick, and we're going to assume we are on a daily chart. What does this candlestick actually mean? Well, it means that we had an open of the day right here at the bottom of the body if we're on a green candlestick. It means that we had a close of the day right here at the top of the body if we're on a green candlestick. It means the highest point that this market got during a 24-hour period is the high of this wick, and the lowest point that this market got during a 24-hour period is the low of this wick. So if we were watching this green candlestick throughout the entire day of price, what we would see is this market open right here at the open, push down to a low, push all the way up to a high, and eventually push back down and close right at the top of the body of that candlestick. That's what one day of price would have looked like on a daily chart if this was the candlestick that was printed. So these candlesticks represent a period of time where price is moving, and these 4 points show you where price opened, where it went at its lowest point, where it went at its highest point, and where price closed. That is a green candlestick. A red candlestick is very similar, and we're going to talk about that in just a second, but I want to go over this a little bit further. Again, this candlestick, any candlestick, represents a period of time. It could be a daily chart. This could be a 1 hour chart. If it was a 1 hour chart, that means at the beginning of that 60 minutes, the price opened at the bottom of the body of this candle. The price went down to a low at the low of the wick. The price went up to a high at the high of the wick, and by the end of that 60-minute period, the close of the price is the top of the body of that candle. So that is a green candlestick, and hopefully that was enough for you to understand what a green candlestick represents. We're going to take a look at a couple of examples on a chart in just a second, but first let's go over a red candlestick. Same thing. Let's assume we're on a daily chart here with big red, and on a daily chart, the red candlestick, the only difference between it and a green candlestick is that we switch the open and the close. Because a red candlestick, if a green candle represents a positive day, then a red candle represents what? A negative day, a day when price fell off And because of that, the open of a red candlestick is the top of the body. The close of a red candlestick is the bottom of the body. The lowest price point that price got to is the low of the wick, and the highest price point that price got to is the top of the wick. So if we were looking at this candle and we were watching it trade throughout the entire day, we would see an open right here. We would see the price push up to a high, push all the way down to a low, and eventually push back up to the close of this particular candle. And that's what it would have looked like if we were sitting there staring at the chart all day. So a red candlestick, the only thing you need to remember is that the open and the close are on the opposite sides of a green candlestick because it's a day or time period where price fell off. Same with the green. This could have been a 1 hour chart, and we would have had the open of the 60 minutes here at the open, a high, the highest point price got within that 60 minutes, a low, the lowest point price got within that 60 minutes, and a close. And of course, it could be any number in terms of the time frame. The important part to remember is these 4 points represent a certain period of price, and they show you 4 things. They show you where price opened during that period of time, whether it's a 5-minute chart or a monthly chart. It shows you where price opened, where price went to at its lowest, where price went to at its highest, and where price closed. That is the point of these candlesticks. So now that you understand that, let's go ahead and take a look at 2 examples, one bullish and one bearish, on a chart to make sure it's extremely clear. Right now, we're on a 15-minute chart of the euro pound. I'm going to zoom in as far as I can, and we're going to look at 2 candles. Let's first look at this red candle I'm going to circle right now. On this red candle, see if you can spot the high, low, open, and close. Where would they be? Hopefully you were able to say that this red candle opened right here. This red candle got up to a high that's right here. This red candle then pushed down to a low that's right here, eventually pushed back up to a close that's right here. And that would be the anatomy of that specific candle. That's exactly what that candle did in what time period? How long did it take this candle to form? Well, as I said, we're on the 15-minute chart. So obviously this was a 15-minute candle. Within 15 minutes, this chart or this candlestick went from an open to a high, down to a low, and back up to a close. And that's exactly what that candle did. On this green one, we're going to take a look at this next. What do you think happened here? Try to point out the open, high, low, and close on your own. Hopefully you were able to say that we opened at the bottom of the body of this candle, and we pushed down to a low here. We pushed up to a high here, and we closed right in this area on the top of the body of that green candle. That would represent the 15 minutes of price action where this candle existed. So that's how you read a specific candlestick chart, a specific candlestick on a candlestick chart. Now let's jump into how do you read the story of a candlestick so you don't have to understand and memorize every one of the hundreds of candlestick patterns that there are. Instead, I want to get you to a point to be able to look at a candlestick and understand what's likely to happen next just by what that candlestick looks like and the price action that existed in that time period. Let's do that now. So as I said, I like to see this as a story. And for me, I want you to imagine this with me. I like to imagine a bull with boxing gloves on and a bear with boxing gloves on. And each and every one of these candlesticks is a match between the two. If you're unfamiliar with this concept, bears represent a selling day or a day when the price went down or a period of time when the price went down. Doesn't have to be day, can be an hour, right? Like we just discussed. And bulls represent a positive day or a buying day, a day or time period when price moved higher. So with that being the case, I like to imagine a bull and a bear with boxing gloves on. And each candlestick is a match between the two. And I like to pay attention to see if it was a draw. Was the match a draw? Did nobody really win? Was it a little win on the bull or the bear side, or was it a major win for the bulls or a major win for the bears? And that's represented to me by these candlesticks. So now you know the story I'm telling myself in my head when looking at these candlesticks. As silly as it may sound, it really did help me at the beginning of my trading career to imagine that with every candlestick. But now let's talk about the technical side of that. How do you know if it was a draw between the bulls and the bears with their boxing gloves on? Well, the way to tell if it was a draw looks something like this. This is what's called a doji. And a doji is a candlestick with a small body and nearly equal wicks on both sides. If you saw this candlestick and you thought of it as a boxing match, who would you think won? If red represents bears and green represents bulls, did anybody win this match? No, of course not. That's not a win for either side. So that would be considered a draw. What about this match? That's going to be a draw as well. We're looking at no one having the upper hand during the match, right? So that's a doji candle, and that's what the story I tell myself about dojis. But what are the other stories you can see on this chart? Let's take a look after the doji here, and let's tell the story of each candle afterwards. Well, the next candle we see, what do we have? How are we going to read the story of this particular candlestick? Well, if you're reading the story, what we can see, remember the open is the top of the body of a red candle. I wish I could zoom in more. I'll probably zoom in on the actual recording software I'm using, but we have an open that's right here. And then, let's say during the first couple of rounds, the bulls took control. But what about this comeback? If I'm thinking about it like a boxing match, what about this comeback where the bears pushed the market down and we closed literally on the lows? The lowest point this market got to, it closed down there. So to me, this candle represents a day, or in this case, 15 minutes of price, because remember, it represents a period of time, 15 minutes of price where the bears completely took control by the end of that period. By the end of the match, the bears were on top in a major way. With that being the case, what do I expect out of price next? Well, I expect price to fall. And I didn't say that because this is an inverted hammer. I didn't say that because it has a long, well, I did say it because it has a long wick to the top side. Let me slow down. But I didn't say it because I know the name of this candlestick, right? That's something that I'm trying to get traders away from, is thinking they have to memorize the name of every single candlestick. No, just pay attention to what price is doing during this time period, and it will tell you what the likelihood of it continuing down is. If you see a candlestick where during the first couple of rounds, the bulls were taking over, and then the bears took over and we finished near the lows, that's a very bearish signal. That's a selling signal right there. So we have that candle. What's the next candle look like? This candle tells me bears were in control during the whole match, right? We have the open of the candle here, the high barely moved any higher. Then immediately we push down to a low, and bulls can't take back control after that low whatsoever. They barely push this market up. So with that being the case, what would I assume price to do? And this is, you can't trade just on candlesticks. Don't take it like that. What I mean by this is the story of this candlestick tells me that during that 15-minute period, bears were in control the entire time. The entire 15 minutes. So let's continue looking. What about here? Well, we consider this kind of a small win for the bears, right? Bulls were kind of taking control towards the end, but we still finished red. So this is the way I want you to start looking at telling yourself a story with every candlestick that's printed. I don't have to keep going with this. I feel like you probably understand the concept, but that is what you need to know. And what I'm going to do next is show you the candlesticks you should be paying attention to and teach you the technical side of what candlesticks actually matter in the market and what candlesticks are likely to push the market around. We're going to do that in just a second. But as I said, what about this candlestick? Just as a final example here, what would you think about, let's say it was a boxing match, what would you think of this candle here? Did the bulls or the bears win this match? And was it I like to see it in three different paths. It's either a draw, a little win for a bear or a bull, or a big win for a bear or a bull. In the case of the candle I just circled, little win, big win, draw, what is it? This to me would be a big win for the bears. Why? Like I said earlier, first couple of rounds, bulls think they have it. They have control. We got all the way up here. New highs, right? Compared to the previous high, we've gotten new highs. And then the bears just took complete control and closed near the lows. So with that being the case, that entire 15-minute period, the entire period wasn't controlled by the bears, but it was pretty cool seeing the comeback, right? And so this would represent a completely bearish signal for me, considering that fact. Now, let's take a look at the technical side of the two candlesticks that I think you should pay attention to in your trading. Again, these two candlesticks are something that's helped me immensely in making more accurate price predictions based on candlestick charts. Let's take a look at those, and I'll see you there. All right, so the first of the two that I want to share with you is what I call the complete control candle. It's CCC, abbreviated with CCC. Complete control candle. And the way I spot this in markets is, if you looked, we're going to go back to the fighter story between the bulls and the bears. If you looked at this candle, what story would you tell yourself? For me, this represents a moment, a match, a fight, a time period of 15 minutes where the bulls, that was a weird B, are in complete control. And the reason they're in complete control is because this is a candle that has very little to zero, in this case, bottom wick and a very small top wick. Outside of that, the entire candle's green. So the bulls were in control during this whole fight. That means that this candle represents a completely bullish period of time, in this case 15 minutes on the euro pound. With that being the case, I assume that price can head higher from this. Of course, this is not some kind of magic candlestick pattern that never loses. That's not what any candlestick pattern is. It's just something that, if applied correctly, can help to provide an edge over the market, which is what I'm trying to do here. So it's the complete control candle. The way we spot it specifically is a green candle, and I'll do a bearish version, a red candle in just a second, but a green candle with a very small to no bottom wick that closes in the top 10% of the candle. So if I get that, if I get a green candle that's open, is next to zero, we have an open and almost no wick or no wick at all here, and we have a close in the top 10%, then I see that, again, telling myself the story of a time period where bulls had complete control. So that's what I like to look at. So like right here, for instance, we have that. Let's say we are pushing forward and we want to find a bearish version of this same exact candle, the complete control candle. Let's push the market forward. Also, something to note, these candles work best right after swing lows and highs. So we have a push up, a push back down, a swing low with a long wick candle, which is the next one we're going to talk about, and then a complete control candle. Bulls showing after this swing low, we're taking control completely. That's the story I tell myself, and that's what helps me to understand the CCC, or complete control candle. So let's take a look moving forward until we find another complete control candle after a high. Remember, it works best after a swing low for bullish or after a swing high for bearish. Here we have another bullish after swing low. So we had the push up, swing high. Actually, the swing high is right over here. Push back down. We have a swing low. And then we have the bull saying, hey, I'm taking control here, because we have a close in the top 10% of this candle. In this case, at the very top, close at the highs, and a very small bottom wick, meaning the story that this says is we had an open here. The bears barely pushed the market down before the bulls said nope and took complete control, closing towards the highs of this specific period. Now let's keep going until we find a bearish version of this after a swing high. And there we have a swing high, but this close is not in the bottom 10% for a bearish. That's what we'd be looking for of the candle. For that reason, we wouldn't be entering there. We're waiting, we're waiting, we're waiting. We now have a swing high after our little 1, 2, 3 move here. 1, 2, 3, putting me into a downtrend. I call this a 1, 2, 3 move if we get a break and close below a previous level of support. Then we get up here to a swing high. After this swing high, what do we have? We have a complete control bearish candle. So what we're looking at here is a candle that opened right here, barely pushed up before the bear said nope, took control, pushed it all the way down, closing at the lows. So what I want you to pay attention to for this complete control candle is a candle with a very small to zero wick to the top and a very small to zero wick at the bottom, whether it's green or red. And another thing to point out that is a little bit beyond the scope of this video is that the candle must be at least 1 ATR. ATR is right up here, so it would be 7 to 8 pips. In this case, these candles were that I was pointing out. But if you want to learn more about the ATR indicator, there's a link in the top right of the video, so you can go over there and learn more about that. But the complete control candle is something that has dramatically increased my ability to predict market moves accurately. So that's the complete control candle. Remember, it's a candle with a very small wick or no wick at all to the bottom and a very small wick to no wick at all at the top. Next, we're going to look at what I call the 382 candle. This is a candle I have talked about before in the past, but it represents a story that can tell you whether the market's going to go up or down. Again, not with 100% accuracy. Nothing is 100% accurate, but it can give you a good indication and give you an edge if used correctly with the correct risk management plan, strategy, other conditions. A lot of that beyond, again, the scope of this video. But let's take a look right here. If you saw this if you saw this candle, what would you think? What's the story you would tell yourself? Well, in this case, we started out as a bull right down here, and the market got pushed up by the bulls, but somewhere in the late rounds, the bears started to fight back and eventually closed down here closer to the lows. The reason I call this a 382 candle is because whenever I put a Fibonacci retracement from the high to the low of this candle, I want, excuse me, it's a 333 candle, not a 382. If that's what I've been saying. I want to see this whole body of this candle below 33.3% from the high to the low. Don't let that confuse you. All I'm doing is taking a Fibonacci retracement from the high of the candle to the low of the candle. If the entire body of the candle is below 33.3%, then I consider this to be selling pressure, dramatic selling pressure. Again, the story being that the bulls had control up to the high and then got pushed around by the bears coming back down to close near the lows. So if we have a 333 candle, I see that as bearish pressure if it's a bearish candle, meaning the wick, the longer wick, is to the top side. And if we have a 333 candle, let's see if we can find one, that pushes the market up, like right here. If you look at this candle, what is your expectation? The color is irrelevant in this case for this specific candle. But in this case, we see an open. We see the bears winning the first few rounds, and then we see the bulls fighting back to close at the highs, as high as possible on this candle. With that being the case, and we can take a Fibonacci retracement again, just to confirm, we have the entire body of this candle above 33.3% of the entire candle from high to low. Low to high in this case, with a bullish example. So with that being the case, I'm seeing this as massive amounts of bullish pressure. And as you can see, the market after this candle pushed higher. Again, this is not a candlestick that is 100% accurate. Nothing is, and it must be added to a specific strategy and rules that you already have that are way too advanced for me to get into in this specific video. We have other videos about it, of course. But I hope that these candlestick patterns can help you make more accurate predictions in the market. And if this was something that was helpful, click that like button for me. If you're interested in some more advanced training on candlestick patterns and actual strategies that I use, we have some availability in the EAP Training Program. This program comes with a full training course. I'll put some testimonials on the screen from recent graduates. In this training course, you'll see the actual candlestick patterns and the full strategies that I use on a daily basis. You'll also be receiving 3 to 5 email alerts per week of trades that I'm taking based on the strategies you're learning in the EAP Training Program. And you will have priority email, which means access to me personally through email if you have any questions about the strategies or Forex in general. I'll be the one personally responding to you and helping you in any way I can to go further along in your professional trading career. So if that sounds interesting, that is the top link in the description. If not, that's totally fine too. Just make sure you are subscribed here so I don't miss you and you don't miss me for our next video. Go ahead and click that notification bell to make sure you're alerted about it, and click the like button for me if you enjoyed the video. Comment below for future video ideas. What do you need help with? And I'll make sure to throw it in the next video. I will talk to you later. See ya.